Hi everyone, welcome to this Mid-Suffolk and Overview Scrutiny meeting for the 15th of December 2025. I'm your chair, James Caston. Can I just first remind you of some domestic arrangements? We don't actually have any members of the public, so I won't worry about speaking out, but could you turn your mobile phones on silent? And also try and make your laptops not ping or anything. Then if you hear a fire alarm, we don't expect one, but please leave and head to the assembly point on the Ipswich Town football pitch. Do not enter the atrium. If you're in the atrium at the time of the alarm, follow the signs to the nearest fire exit. Use the stairs, not the lifts, and don't re-enter the building until it's safe to do so. So I'll introduce the guys here at the start of the item 7, but first of all we'll go to apologies for absence and substitutions, please, Alicia.
Thank you, Chair. We have no apologies this afternoon.
Okay, thank you. And item 2, to receive declarations of pecuniary, other registrable or non-registrable interest by members. Anything? No. Oh.
Well, Chair, I assume we all get a dispensation for being council taxpayers.
Yeah. Yes, we do. Yeah. Right, okay, thank you. Item 3, to confirm the minutes of the meeting held on the 20th of November. Are there any issues with the minutes? No. Could I have a proposer to approve those minutes? Councillor Patchett, and I'm happy to second them. We'll do a show of hands vote. All in favour? That's 5. Yeah. And is that an abstention? Yeah. Thank you very much, Councillor Rowe. Right, item 4, to receive notifications of petitions in accordance with the Council's petition scheme.
None received, Chair.
Thank you. Item 5, questions from the public.
None received.
Item 6, questions by councillors.
None received, Chair. Thank you.
Okay, thank you very much. So we'll now go into the first bit of business, which is item 7, MOS 25-7, the 2026 to 2027 draft general fund budget and medium-term financial position. This is probably one of the most important meetings we have for scrutiny. It's not necessarily a decision-making meeting. It's to sort of influence how it's presented and how we feel about the information, how the information is being collated, and to challenge like risks, assumptions, and sustainability, basically, of the council's accounts. So what I'll do to start off is if we could please do some introductions. We'll start from the left. If you could just say your name and your position, that would be great for councillors. Thank you.
Yep. David Fevier Ward, Head of Finance.
Melissa Evans, Director of Finance and Procurement.
Richard Wench, Deputy Leader, Mid-Suffolk.
Jenny Smithies, HRA Senior Finance Business Partner.
Okay, thank you very much for coming here today. So is someone planning to introduce this? Councillor Winch. Okay, I'll give you the floor then. Thank you.
So the bottom line on this budget is a surplus of just over 2.4 million. And if you compare it to last year, by and large, it's sort of the same number. Last year was 2.38 million. So it looks the same sort of result. But it sort of disguises a couple of significant trends that are going on. The most significant thing that is going on is a lot of pressure on the total funding for the council. So most of this is not new, and it was predicted in last year's budget. But if you look at Table 1, you'll see that the government grants have dropped by about 2.5 million. It's made up because we've made a decision to increase council tax and a bit from business rates. But overall, our total funding has dropped by about 1.7 million. Our expenditure is also dropping by about 1.7 million. And that's due to changes in the pension costs, which you probably picked up, and an increase in sales fees and charges, which is largely a volume increase, not a big percentage increase. So, and there's a few other bibs and bobs. So the result is the same because we managed to reduce net expenditure by 1.7 million this year. Otherwise, it would have dropped by quite a lot. If you look at the medium-term financial plan, you can see that if we rolled the current cost base on with our current predicted income, we would start to go into a serious deficit in the medium term. We're fine in the next couple of years, but it's what would happen longer term. Should I say anything else?
Can I just,
Yeah.
is that right? Just to mention on the, Councillor Winch mentioned about the funding. The reason we took all the funding out is because there are so many changes happening with Fair Funding 2.0, the government redistributing all of the funds that across the country. We are expecting the provisional settlement, I've heard Wednesday, but it might be a bit later than that. So once we know that, we will know whether we're getting any grant funding and the levels of that grant funding as well. So hopefully the position will improve even more, but we're just being cautious at the moment and not putting anything in until we know for certain, because everything is just changing so much in the business rates and the grant funding. So
we're expecting to know that for the next 3 years.
yes, yeah, great.
Right, thank you very much. And that's not unusual for the general fund budget. I don't think I've had a single year where we've actually had time to look at funding or different. The new homes bonus has always been undecided, coming right up to the this meeting. So yeah, that's pretty standard. But yeah, quite worrying about losing 4 different types of funding and what we're going to get. But what I'll do is I'll open this up to questions now, if anybody would like to start that off. Councillor Patchett, thank you.
Thank you, Chair. It's just right at the very beginning, Executive Summary 1.1, and I've asked the other councillors this and they didn't know the answer. So we've got a surplus in the revenue budget, and also there's a decrease in what we're spending on services. But what's the difference then between services and revenue? So what is paying for what? So because I always thought when we were dealing with these budgets, we had a capital budget and a revenue budget, but it seems we've also got this services here. So could you just explain what is the revenue paying for and what is the services budget paying for? Because to me, that they should be rolled into one.
Go. So it's probably best if you have a look at the table on page 18, because we break it down into the net expenditure on services, and then the next chunk is all of your recharges, your capital financing costs, investment income and dividends, which brings you down to your net cost to service. So your net cost to service next year we're forecasting at 14.5 million, and then the section below that is then the funding, whether that's council tax, business rates or government funding, which then helps to pay for that. So the difference between the two is where you end up with a surplus or a deficit. So obviously if there isn't enough funding to pay for your net cost of service, you have a deficit. But because you've got, you know, a significantly low net cost of service and at the moment more funding, you've got a surplus of 2.4 million. And that's all revenue. So your capital is a separate pot of money. Your capital is separate to it. This is just the revenue budget.
Any other? Are you happy with the answer, Councillor Patchett?
So sorry, to me the layman's answer is that you've got all your services, your cost of employees, your cost of doing stuff. That's one section of your costs. You've got another section which is all the netting off of all the finance things that you're doing, the borrowing money, the investing in this, and that gives you a mini difference one way or the other. And it's joining those two together that gets your overall expenditure. Yeah.
Okay. Any other questions at this stage? Councillor Scarf?
Got a number of questions. I don't know how many you want to take from each member at a time. Chair.
Well, do you feel that they all go together, or do some of them...
they come from a different range of...
They're all unique questions.
Yeah.
Well, please just do what you think. I'll quite happily welcome you back into the questions later if you want to have a break in between.
Right, okay. Page 20 refers to the pay award assumption of 3%. I did ask this at Cabinet as well. It acknowledges that there's a risk issue, bearing in mind last year the eventual pay award came out at 3.2%, and every 1% difference is quite a significant sum of money. Do you think the assumption should have been made that the pay award would have been the same as last year and would have been a better starting point rather than 3%? Or do you have conviction in your assumption that 3% is adequate this year when it wasn't last year? That's the first question. Perhaps the officers could answer that one first, Chair.
I'll probably answer in the same vein that I did last week. So obviously, as you're aware, it's a nationally set policy, the pay award. The numbers that I've seen been requested from the unions last week was a 10% increase. Obviously, there's a lot to and froing, going to go back and forth over that, and I expect that to come down. We had to estimate somewhere in that region. It was 3% last year, as you're aware. It turned out to be 3.2%. So whether 3% is on the low side, who knows? But you know, I'm comfortable that you've got reserves there. Should it be 3.5%, 4%, we can just take that from the reserve. So I think that's, and we have to balance it also with Babergh's position because it is a shared workforce as well. So if we assume a higher rate in Babergh, obviously that they've currently got a deficit of 900k, so it would make that even higher. So you know, it is an estimate, and yeah.
Okay, thank you, Chair, for that explanation. I feel perhaps that we're tinting it a bit towards the Babergh situation rather than the Mid-Suffolk situation, and I still think it is a risk. But anyway, it can change as the budget go forward, as you say. The next question was on page 25 and 26. It mentions car park income on page 25 of 695,000, but literally over the next page it says it's 697,000. So something is not quite right there with the figures. I don't think it's probably the only example in the papers. Do you have any comment on that one?
We'll just give them a chance to actually find that exact item.
I think for that one, it's possibly just a rounding error. For the other fees and charges, the table at 9A is just the fees and charges, whereas the table at 9B, there may be some other income that's against some of those service areas because it's sales fees and charges and rental income. So there may be some other income that is not purely fees and charges, and that's why those two tables will not equally match, because there is other income in some of those other service areas that is not part of the fees and charges setting, if that makes sense. But if there's any more you want any clarity on, we're happy to provide a breakdown.
Thank you. I mean, that provides some clarity, but I still think the figures, I mean, I can't see why the car park would be different, because there's no other income from the car park apart from the car parking fees, but to my mind. But anyway, it's a minor point, but I just think, figures should be sort of consistent. On page 27, it gives the government grants breakdown, and I appreciate that you've been very cautious about what government grants we're going to get. One does expect that we'll get something, but the question was specifically on the employers' national insurance compensation, which came in last year because of the increase in employees' national insurance. have you heard anything at all in terms of an indicator as to whether that compensation will continue? I know you've got zero in the papers, but I got the impression that they were actually going to compensate us for a period of time, and 1 year doesn't seem to be very long. Have you picked anything up on the networks, etc.?
Yeah, I absolutely have. The danger with this one, though, is this is one of those grants that government have said will be rolled into revenue support grant, and there's quite a lot of those. So whether we'll be able to trace that back through, I suspect not, because I think they're going to recoup all of these grants that they're rolling in, including some of the county grants as well, and then redistributing the whole lot across the country based on different area cost adjustments and needs adjustments as well. So they've said they are going to include it in there, but I don't think we'll have visibility of that. I think we've just got to trust that that pot of money for each council has gone into the bigger pot and then will be redistributed, but we won't get a breakdown of how much we're receiving going forwards.
Thank you. Sounds like a lot of smoke and mirrors from the Treasury, which doesn't make it easy for you to know whether you've actually been adequately compensated for the Employers' National Insurance contribution or compensation. Page 30 refers to 4.32. We did get an answer at Cabinet the other day, but I wondered if we could have a little bit more clarity on why 4.32 says, as referred to in paragraph 7.11, any revenue support grant the council may receive in 26-27 will be reduced by the council tax income, and the deduction is based on the maximum increase of 2.99%. Therefore, if the council does not increase by the maximum, then it will lose more funding. Would it be possible, because I think this is quite a confusing point, for the narrative when it comes forward in the next format actually gives some context as to why we are proposing 2.99%? Because obviously, clearly, we don't need 2.99% being a fairly cash-rich council, but if the penalties are more than the 2.99%, would a narrative be helpful for members? I feel it might be.
I think it's a good point. Just to be 100% clear, that the reason we've decided the 2.99% is really twofold. One is that we're worried that we will be penalised as a council if we indicate that we're not putting up council tax. Maybe that shouldn't say will lose, it should say could lose. And we don't know how that's going to work out, and there's even been worries about us having to give money back rather than just have the grants reduced. So that was one reason. The other reason is when you look in the medium term, you can see the disparity between income and expenditure growing quite alarmingly. And we did debate, because we're going to have a very good year this year, we're going to have relatively to most councils a very good year next year. We did debate whether we wanted to do this, and we've just decided that we would be putting the medium-term council finances in too much risk not to do it. We don't need to do it this year as it happens, because we've got a surplus 2.4 million. But I think it would leave us quite wobbly if we do that.
Just to come back on that then, Chair, I think a narrative would be very useful for members to explain the reasoning behind it, because it does seem rather confusing that we have to go for the maximum. And if there's any information you can give us regarding the penalty, if you like, if we don't go for the maximum. I know government assumes that we go for the maximum, and they certainly do from the county council's point of view, but a narrative there I think would be useful in explaining it in the budget papers. Sorry,
there's one other thing I should say, that if we don't do this in the medium term, we'd definitely be looking at quite significant cuts in services, which is another thing. It's a really difficult balance to get right this, because at the end of the day, we don't want to put up council tax if we don't need to.
Thank you very much. Councillor Baker and then Councillor Patchett.
Thank you. Just a couple of thoughts. Firstly, quite early on in the report, it has a list. I'm just trying to find the page again. It has a list of objectives, basically. I'm just going through the pages, early stages. Bear with me. One of the early stages we've got. Here we go. It's on pages 14, 15, part of the executive summary, and it talks about the objectives, basically housing infrastructure, resilience, community well-being. Obviously the top level is the strategy really about where this money's going, where this budget has, how it's been put together. in kind of a smart approach where you're trying to match your objectives to your kind of your figures and things, it would be quite helpful to identify where these can be seen in the budgets. So I don't know, at the moment, you know, I'm reading, they're quite standard things that you'd expect, working to respect, harness and promote local culture. I appreciate it's very difficult to do, but there's things in your budget that you know that thing is going to be dealt with, if you see in certain aspects. So whether there's some colour coding or something like that, just to show that these aspects, and are there any aspects that we can't really allocate to a budget? It might be quite a good quick visual, so I wondered if that might be possible. I don't think it's in there already, unless I've missed it. And the other thought I had was around pensions. So the pension contribution is going to be reduced from 26 to 16, which is a huge drop, 10%. County currently run at 19%, something like that. I just wondered why it was so high before, and actually the impact for staff members, you know, what that's going to look like if the conversation has been had, you know, if there's any consultations around that, if there are any requirements. It's not an area I know a lot about, but I know that that's quite a big chunk really, so appreciate it's got to be done.
No, I'll do the first one, I'll let Melissa do the second one.
Thank you.
One's really difficult. On the what I think the question is a good one, and that is, could it be clearer what we're actually getting out of this budget in terms of what? So we will try and do something on that, create an appendix or something. That would be a good idea.
Yeah, and we are actually having conversations with the policy team as well to see what we can do in the finance system to show transparency of our budget to our action plan as well. But it's going to take a little bit of work to try and do that, but we'll try and do something for the budget report as best as we can. And just on the pension one, so the dropping from 26 to 16.4 doesn't affect employees. So that's the employer's contribution, and it's to make sure that the pot is funded. So previously we've been paying 26% and it was higher than that before. So the pension pot is now massively overfunded. We've got more money in there than we need. So the actuaries have looked at kind of age profiling and bits and pieces like that, and we're all basically reducing it. So across Suffolk we will all be reducing to 16.4%. So we'll have a consistent contribution, which obviously helps as we move into LGR as well. But it doesn't have any impact on the staff. It's just the pot, the size of the pot, and make sure we've got enough money in there, but because we're overfunded we can take advantage of reducing that, so it doesn't have any impact.
Thank you. So just to clarify, because I don't know that much about this, so because when people are employed, they keep an eye on what contributions and things go in, they keep an eye on that, and there is some kind of following of that. So districts do not publish pay scales really in their entirety, they're very basic. They basically show a scale point and one value. County will publish everything, the national insurance contributions, the actual cost to Suffolk County, for example, and the pension contribution. So I'm just wondering where we're sort of saying it's not going to have an impact on the individual. I suppose you're looking at an entire pot, aren't you? You're basically saying that, so what is the commitment to staff for Suffolk County, for Babergh Mid Suffolk's employer contribution?
So for the benefit that individuals will get, we're not changing that. It's the same as the local government pension scheme has always been. So
right.
The rates are not changing for what we're contributing for individuals on top of what their contribution is. So that's not changing at all.
Okay. I don't know if I fully understand, but we'll go there. Yes, fine. I don't know a lot about this area. I know other people do. So, yeah. Thank you.
Are you happy to move on? Yep. Councillor Patchett.
Thank you, Chair. So if I can zoom us back up to page 21, table 4. Obviously, big jumps up and big jumps down always get my attention, and we've got sort of one of each on this one. So firstly is the action plan, because it's a bit like what Councillor Scarf said about the narrative and context. So it says action plan, but I'm not sure what £500,000 to an action plan is, because I don't know whether it's mentioned further down in the document. So I guess the question is, what is the action plan, for one? And then obviously domestic waste disposal. So we're spending 326,000 on it, and then suddenly we're spending nothing on it. So what is that something to do with the better recycling, or is that something else? So there's sort of two questions on that table, please.
The action plan one, in the last budget, I don't know if you remember, but we had a whole page or a page and a half called an action plan where we tried to itemise all the different things that we thought we wanted to do. The trouble with that is as things change, you end up doing some of those things, but then other things arise. So an example would be this year we've done the fund for granting for land. That wasn't in the action plan. So what we decided this year was we'd have an item called action plan of £500,000 that we could then call on for things that came up that were against our main priority. So we didn't have to go through a whole council cabinet process for it. That's what that is, and so it didn't exist last year as a separate item, but we did have an action plan of all the different little bits that were in all the different budgets.
Okay, yeah, I guess, I mean, would it have been so hard to have just had a little paragraph that just said action plan from?
I agree with the point.
Yeah.
Yeah.
And also, sort of domestic waste then, why is that going to zero, please?
Yep, so happy to take that. So again, yeah, you said it perfectly. It was down to the better recycling. So the changes in the waste. We've got increases in the major contracts to account for the changes again in the waste service there. So yeah, that's the reason.
Yeah, so I think it said on page, 25, we were awaiting some figures on the parking. Have we got those figures? I know it says week commencing the 15th, so potentially they're not there, but have we got those figures yet?
Okay, apologies, that was an oversight. That should have been for Babergh only, not for your report.
Have you, would you like to Councillor Piper to come in, Councillor Patcher, and give you a chance? Yeah.
Thanks, Chair. Afternoon, all. This might be completely elementary, but in 1.14 on page 16, where we talk about the dividend from Gateway 14, is it possible to see a range? Because it's suggesting 14.5 million over quite an extended period, and it could equally be zero, couldn't it? Or it could be much more than that?
It could be, yeah. So I think you're looking at Appendix A, aren't you? Is that right?
Yeah.
So what we've done is take what we think is a realistic, slightly pessimistic view of where we might be.
Yeah.
And a lot of the plan does depend on how well that goes. And if you think about it, it depends on getting new people signing up to be on Gateway 14. And that's really quite unpredictable in the current economic situation. So we've taken what we think is realistic. I would hope we could do better than that. But if you start putting in big numbers there, then you start throwing out all your other assumptions.
So this is erring towards the side of pessimism, really?
Slightly, but you're right, it could be zero.
Yeah, okay.
You know. The difference between this and grants, so why on grants we assume zero, on this we haven't. This is much more under our control and based on what's previously happened and that kind of thing.
Okay, super, thank you.
What? Yeah, the point's just been made here. This year we are getting 6 million, which is more than we had anticipated. Yeah.
Okay, thank you very much. Councillor Patcher.
Yeah, thanks. So just one on the business rates then. I think I'm on page 28. I'm not going to pretend that I understand how business rates work and the multipliers and top rates and pot Bs and As. I don't understand it. But I think it's my understanding we bring in more money in business rates than we do in council tax receipts. So it's really important that we understand business rates. So I know there's some changes. Have we got any rumours or whispers or actual knowledge of what these changes are? And are we getting more or less, do we think, from the government of our business rates? Thanks.
I could probably spend all afternoon talking to you about business rates, but I'll try and keep it short and sweet. So historically, the government have set our baseline business rates, and then year on year we've had growth which we've got to keep in the district. So, yeah, that's been really good for us. We've benefited massively from that. What's changing now is the government are resetting all of that growth. So they're saying we're going to take all of that away from you and we're going to redistribute it across the country, and we're going to give you a new baseline as well. So they say what they think our baseline will be. On top of that, we also get what we call Section 31 grants, where there's retail, hospitality and leisure reliefs given, where they've not increased the rateable income. So they've put a cap on it, but not charged it to businesses. They've given us the money for that. So over the last 10 years, it's become more and more complex, and there's more and more money coming in that we don't really have sight of what's happening. So they're going to reset the baseline. They're changing all of the multipliers. So in the past, we only had one multiplier. So if a business had a rateable value of X, they would only pay 50% of that rateable value. We're now having 5 multipliers depending on the category of businesses. So that's another complication that's being looked at. SRP are working on that at the moment. Now the multipliers have been announced. The government have also said that they're going to provide transitional relief to businesses as well, but we've seen no details on what that transitional relief is. So, you know, businesses are looking at what their new revaluation amounts are and panicking, thinking, oh crikey, you know, our business rates are going to go up, but not knowing how much transitional relief is going to be there to protect them. So that's quite a difficult unknown at the moment as well. So I think what I'm trying to say is the business rates is going to change quite significantly, because we have been, I think in the past we've had about £3 million worth of growth since they last did a reset. So that is quite a big chunk that could be taken away from us, and then we'll start from a baseline and start to grow again. So it is quite a complicated picture. And then they set a levy as well to make sure that we don't go above that levy. So, and there's tariffs and top-ups and all sorts of other complicated bits in. So it is quite a complicated one to get your head around. But yeah, it's changing quite significantly.
We have asked a few times for Melissa to do an explanation to all members on business rates, because the point that Councillor Patchett made, in the budget year, we're going to get roughly 8.7 million from business rates and 7.5 million from council tax. The business rates are really critical to us. I think we've all agreed that until we know what the changes are, when we've had the changes agreed from government, then we will do that briefing, because it really is a hugely important element to our finances.
Yeah, it's quite difficult, and also you have a lot of councillors won't. If they just take it away, nothing will add up on their accounts at all. And Mid Suffolk is in a much better position than a lot of those. So it's quite difficult. You can't allow for an unknown in the budget, but also at the same time, you've got to think that it won't be too extreme, because there'll be a lot of councils falling down. I'll break my own rules of debate, but. Are there any further questions? Councillor Baker.
Thanks. Page 45. Just wondered if you could give me a sort of brief outline as to what the differences are between under operational service delivery reserves. There's homelessness, rough sleepers and temporary accommodation. So that, you know, obviously there are probably some slight differences there, but it'd be really helpful to understand how and why that's.
So I think that's come about because of the funding that we've had historically from government as well. So there's different grants that come out that we tend to put aside in an earmarked reserve. So that's why we've kind of got 3 in the homelessness, temporary accommodation, and I forgot what the other one was. Rough sleepers. Yeah, because we've had specific grants for those. So it's kind of a bit of a legacy thing where government have given us money and we've set it aside in the earmarked reserve to then draw down to fund the staffing and the services. So yeah, it's a bit of a historical thing linked to grants from government.
Councillor Patchett.
Okay, so get to the meaty parts now then. So I'm seeing one number appear quite consistently in this document. Richard smiling. 2.99. You knew that was coming. Yep, so 2.99 is being mentioned a lot in relation to council tax. It's been factored into all of our forward projections. So is it fair to say that our hand is being forced by the government that if we don't do 2.99, they're going to drop, is it our RSG, they're going to, the revenue support grant, they're going to drop that by 2.99. So our hand is essentially being forced by the government right now.
Yeah, absolutely. And that's no different to what we've had in the past. So when we get the settlement, there's always a line in there, and I can go back over previous years that the government have published that show what the maximum council tax would have been, and they've effectively reduced our funding and not given us any additional revenue support grant. But it's going to be even more critical this year because of the drop in our business rates growth. So in the past, it hasn't been so much of an issue for us because we've had new homes bonus, we've had business rates income. Now all of that's been stripped away and all rolled into one pot. It's going to be even more critical, and as you know, Councillor Winch said, the costs going forward of our employee costs, our contracts going up, it's getting more and more critical that we are having to rely on council tax, and government assumes that we're raising council tax by the maximum and will not give us any more funding to cover the cost of our services. So.
Okay, yeah, another slightly meaty one. So there's a really big number in here, which is 1.2 million, and the only thing it says next to it is staff savings, and there's a little paragraph on it which, well, okay, so I'm on, sorry, page 32, which is table 13. Yeah, so 1.2 million, and it just says staff savings. Now, if I was in the council and I was staff, I would be slightly panicking, so can we have a bit more context on those two words, please, staff savings?
Yep, so there's a number of different things happening here. So this is moving us from our 25-26 budget to the 26-27 budget. Some posts that we had in are now being funded from grants. So I talked about like the homelessness grant and the temporary accommodation grant. So we've now reset some of that. So there are some posts that are coming out that are now being funded from reserve. So that's making savings. There are quite a lot of vacant posts that we had in there that we've now looked at and thought actually we don't need those posts. So we've stripped those out as well. So some of it is a tidying up housekeeping to match reserve and grant funding, and some of it is just resetting our establishment in terms of vacant posts that we had in there that we don't necessarily need.
But I think we will try and expand that comment,
yeah,
so
absolutely.
We don't have to have the same question.
Yeah, definitely.
Councillor Scarf.
Going back to page 44, Councillor Patchett was talking about the assumptions of 2.99%. But the line immediately below it says council tax base growth, and I can see that it consistently drops up to the year 2030-31, and I wonder if we could have some sort of explanation about that, because we all know that the government wants us to build more houses, the expectation is to build more houses, and therefore the assumption members would be that the council tax base grows, but the assumption within the plan here for the medium-term financial plan is it drastically reduces. So why is that?
We're fighting not to
Who's going to
answer
take
that
it?
one.
I'll start off and then David can chip in. So when we set the tax base, there's a number of things that go into it. So things like the second homes premiums, all of the discounts as well will reduce your tax base. So the team have done a lot of number crunching, and based on kind of historic levels, what's going to change going forward, what might drop off. So they've done a lot of modelling to get us to a better position, if you like. So it's not, you won't just see pure growth in there that's new homes, if you like. There's a lot of other factors that will reduce the tax base down. Anything you wanted to add?
Yeah, so long term, we assume that there'll be a drop off in that kind of second home and those premiums on that council tax. So that's where you're seeing that drop off there in the council tax base growth.
I mean, this is an open discussion. I was just asking, do we include the growth in housing here? Because the numbers do look a bit odd, I've got to say. So, yeah.
I just wanted to ask a quick question. This fair funding review is quite an important part of this, isn't it? But does that affect the funding this year coming in, or will that be next year?
It will only be next year, so it's a new spending review from 26-27 and the next 3 years. So
Yeah.
it won't affect 25-26.
Yeah. So the funding that we're waiting for has got nothing to do with that. Yeah. Okay. All right. Thank you, Councillor Baker.
Just got a correction on page 14, something I was questioning. It references the capital budget, and one thing I was querying is it mentions the capital budget for this next year, and then it talks about the capital budget for sort of a 3-year, 4 or 5 year period, rather than looking back at the previous single year or you see what I mean? So I just wondered why that narrative looks a little bit different to some of the other narratives, but the appendix on that refers to the glossary. It's actually Appendix E. So just
Councillor Patchett.
No, thank you, Chair. So I'm going to refer to 2 tables now. So one's on page 36 and one's on page 43. There is a figure for gross income in 2030, 2031, and the same gross income is on a different table on page 43, and the figure's different. So it's 38,873,000, and then on the other table it's 38,875,000. So there's probably a rounding error.
If it's only 1,000 or 2,000 out, it probably is a rounding error, but we'll double check that and make sure the 2 tables do tie up if it isn't.
Jake, can I do another one? Yeah. So, okay, I've got another anomaly here as well. So this is the problem when I've got time in the evenings, I actually cross-reference all the numbers. So the Cretan Road Depot maintenance, it's got 2 different figures on 2 different charts, but these are not just 2,000, they're quite significantly different. So it says 700,000 on page 52. So yeah, Cretan Road Depot maintenance, 700,000, page 52. And then if we go to Appendix D, it's 390. So that's quite a big difference, not just 2,000.
I think they'll need a little bit of time to, if anybody is watching, we're working with pages and pages of figures, so it does take a while for people to catch up. So we'll just give them the time they need.
I don't know.
Can we just clarify where the first number came from, please?
Yeah, Appendix D
And then the other one came
is on page 52, which is Appendix E, I think. So we need pages 48 and pages 52. On page 48, it's right down the bottom, property development regeneration, 300.
I think I can probably help clarify that. So Appendix D is the amount of that 700k that is being funded from reserve. So there is another element, and I can't do maths in my head because I'm on the spot now, that's coming from community infrastructure levy. So that's coming from a different pot. So Appendix D is just showing how much we're taking from the thriving community or the invested in district reserve. The other element is coming from SEAL. So that's where the difference is.
Yeah, I guess I haven't seen that extra 310 then. That's not listed, then, is it? Or is that listed on a different annex somewhere?
Yeah, it'll be in the capital financing section of the capital programme, but there will be other things in there as well. There may be other contributions making up, because I'm just looking at the seal figure, 25, 26. Yeah, so you've got 5.8 million and then 3.7 million, but obviously there's other capital schemes that are being funded from reserves, so it would be too busy to show every single scheme in the capital programme. So it's in amongst that 3.7 million funded from seal.
Are you happy with that, Councillor Patchett?
Yeah, no, so I take it, yeah, the other 310 is bundled up into another figure, yeah.
Yeah. Are there any further questions before we go into debate? Yeah, Councillor Patchett, you're on a roll.
Yeah, okay. So down on page 74, so we've got additional savings. Sorry, I'm on a different thing now, am I?
That's HRA. Yeah.
Am I? Okay, well, skip that one then. I'll wait.
Save that, we'll do that in a minute. So is that everything for questions? And we'll go into debate. Sorry, we've had some really good questions there. There's a lot of eagle eyes in the committee. Going through these figures. They are, like I said before, it is a lot of information, like pages and pages to go through. You've done very well. This is the part of the committee where we look at recommendations, and we sort of debate points that were made and things we've come across in the questioning. It's a really interesting budget, because obviously the elephant in the room is local government reorganisation, and it's very hard. It's very hard to do a budget that leads to LGR, because you can't do your accounts that way. But also the other uncertainty, which, like I said, is every single year, is the fact that we've got new homes, no new homes bonus factored in, revenue support grant, funding guarantee grant, compensation for national insurance. We probably will see a reasonable amount of money from those, but we've absolutely no assurance that we will. So it's very difficult when you look at putting increasing tax 2.90999%. You're not actually able to see what your final figures are going to be in a budget by that point. So it does make it really difficult, but it's always been like that. My view on it is we've got this this review. I can't remember what it was. It was called the funding review coming through, and it seems when that comes in, we get penalised for being a good council and having reserves and increasing business rates, doing everything right that is expected of us, and then all of a sudden we're penalised for that fact, and it is a bit disappointing, really. But that won't affect this budget. That will come in like during this next year and affect the one after it. But apart from that, this the actual budget, I think it's it's quite a standard budget. It's probably not quite as optimistic as we've seen in the past, but I think the figures in it are sound. But I'll go to the floor and ask any members to comment. And also, while you do so, think of any recommendations that you might want to attach, which could be for the next year's budget, how things are presented, or if anything could be changed in the meantime. That would be great. So I'll go to the floor. Does anybody want to comment? Councillor Scarf?
Yeah, I think I would agree with you, Chair. I mean, it's like hitting a moving target, really, at this stage, without knowing what the final figures are. I do think that well-run councils like ourselves are going to pay the price for those that are not as well-run. And when we're looking at our papers here, Lord alone knows what other councils are looking at if they'd assume no grants at all. And I'm sure our sister council is in that situation at the moment. I think the important thing is that we will actually get a little bit more certainty when we know what the final settlements are, because that will give us a 3-year forecast. And we've not had that before for a long time. It's been year by year, which makes it very difficult to actually plan your medium-term financial strategy if you've got no idea which government grants are going to disappear. We have benefited from some of the grants to a longer extent than we expected to. New Homes Bonuses, one in particular, which has been disappearing for years, but now it has disappeared, and that is a very large chunk of our income. So I think the basic assumptions in here, I did question the pay award one, which I still feel perhaps ought to be 3.2%. I mean, it's a theoretical figure, but I think we need to perhaps change that one. And just a few of the narrative things that we've brought up today could be useful recommendations from the Scrutiny Committee. So I think these are very difficult to understand unless you're a finance expert, and I am not a finance expert in any way, but I think the narrative for members when it's presented to full council, any of those sort of things that we've raised here and in Cabinet, if they could be incorporated within the papers, I think that would be helpful, because it will allow members a better understanding of the budget as we move forward to come to our final decision about what we're going to set, and indeed whether we're going to increase council tax by the full amount or not. So I think well done at this stage. There are a lot of assumptions in there, but I think you've started on the right avenue, because you've gone on the pessimistic side to a degree, which I think is the right way to do it. So we'll see what comes forth from the government settlement.
Thank you very much, Councillor Scarf. Councillor Patchett?
Yep, thank you, Chair. I guess, yeah, for me, it's that sort of disappointing picture of what's coming maybe in about 3 years' time, where we've had a council that's had sort of good funds and good reserves, and then we've got this deficit potentially coming down the line in 3 years. We're almost, as Councillor Scarf said, a victim of our own success, that we've got reserves. And I think this transitional protections, where we only get 95%, whereas everyone else, there's only 68 councils in the country that get 100%, we get 95%, we lose 5% because we've got reserves. So because we've been prudent in the past, it's like a race to the bottom. And I think that this current government is trying to drag everyone down as opposed to build everyone up. The very fact that they're take away that RSG, and they're forcing you to go 2.99. And I find that very sort of disappointing, that in times of dire need for all councils, they're pulling away these grants, whereas they've come in and they've promised actually to help councils, and it seems like the complete opposite. I mean, I guess, you know, do we need to sort of tighten up? Because if we're going to be 3 million down potentially a deficit in 3 years' time, you would argue, why are we giving £1 million to the Food Museum? Should that money not have been held back so that we're only 2 million down in 3 years' time? Okay, well, I mean, that's probably not a conversation for today. Thinking of recommendations, so I've noticed a few times that there's not enough narrative to these numbers. So obviously I questioned it about the action plan. I'd forgotten what the action plan was from last year. So I think when we've got these tables with numbers on, I think we need some paragraphs next to them that have got some narratives, or even if it's an asterisk or it's a 1 in brackets and indices or something, to just remind us of what these things are. Because I know you guys over there live this day in, day out, but some of us have got lives, and we don't live it day in, day out as enthusiastic as we are. So, and also, next to some of the tables, like table 4, it's referring you, just above table 4, it's referring you to table 13. So I found myself reading this, jumping all over the place, trying to find things. So I guess, I know it's difficult in this, but can we keep paragraphs that relate to a table near the table so we can sort of quickly refer to it? Because you just lose track quite quickly. And that's probably the only thing I sort of have got for recommendations. It's for ease of me, I need more narrative, and perhaps I need the paragraphs near the table that I'm looking at really as a visual. I don't want to be jumping all around the document. That's one for me.
Is that a recommendation to take what's been talked about in this meeting and take it on board when producing the accounts, or would you speak to Alicia about this?
Thank you, Chair. So I'd probably take that in two parts. I would say the issue about the formatting and where the paragraphs are, it's probably good for that to just be a comment that gets picked up on by the officers who have heard it. In regards to the request that I've been picking up from a couple of members about extra narratives in the report, especially around the action plan and the Council's key priorities, that we can make into a formal recommendation, as that's a specific request for additional information to help us scrutinise. Thank you, Chair.
Yeah, that sounds great. Councillor Baker.
Thank you. I'd like to ask a couple of things, really. On the pensions, I think we have had a day before, but I wondered if we can have a training day, because I recall when we were looking at our pension funds, they weren't quite meeting what they are supposed to. I think I'd looked at that account once upon a time. So, and it was a very helpful day, and this was some years ago. Was involved. So I'm wondering if we can have some pension training potentially, so we can understand that and some of our investments in that way, because it's a big thing, and obviously when you've got a local authority you have a lot of staff, there is big commitments, so I would welcome that. The other thing is on page 34, 8.10, it mentions about the local government reorganisation, and obviously long-awaited settlement from government is not anticipated to be positive. So there's some narrative in there, and it's talking about anticipated savings will go to the successor authority. I can't see, and I can't find it, that we've actually got a line on here anywhere, even with zero in. So obviously we've got lines in here where we have zeros against income because we don't think we're going to get any, or we don't know that we're going to get any. You know, LGR, there will be a cost. We think it might be negative towards the district council. I think there should be a line in here somewhere to acknowledge it before we forget about it, and it goes into kind of the text. So I don't know how people feel about that.
So on the first one, if we asked for a training day that included a lot of different aspects, not just the pensions, like investments in the council, and maybe a little bit about Gateway 14 and the dividends and how that all works, I think that can be quite a reasonable training session with that, and that would be very helpful, I think. If you'd be happy for that to be expanded into something quite a bit larger. The second, would you be able to put that in a recommendation just to help us out?
So I would like to suggest, unless Melissa, you know where I'm going, don't you? You go for it.
Can I just add, just to share my thinking with the committee? So what I've been talking with the other Suffolk authorities about is actually setting aside a reserve in each of our budgets. So we haven't got to that stage yet because we want to agree the amount that we're going to put in that reserve, and it needs to be fair, and also what we're going to call it and the wording around it. So we are going to agree some consistent wording and set aside a reserve for LGR. It's just we haven't got to that. I just wanted to acknowledge it in the report to say we haven't forgotten about it, but when the February Cabinet report comes forward and then on to Council, that will be in there.
So yeah, you're happy that that's going to be done, and yeah, okay, yeah, thank you. Councillor Rose, sorry.
Yeah, been quite quiet today. Yeah, I was just thinking on the LGR stuff, because we've done because we don't know what shape the unitary authorities will be, like how many and stuff. In future, if possible, kind of would, like, they might have been put in already, I'm not sure, but if they haven't, the stuff from business case, because like part of going to unitary authorities will be like a reduction in costs. So with the 5-year plan, like that will cover when the like savings that have been mentioned, but by the successor council. So yeah, like presumably, like basically the surplus deficit bit as we get into like five years, when we know what's happening with LGR, presumably those numbers should change, because that's kind of the whole point that the government is wanting to do LGR. And if it's not going to do that, then that's the figures that we put in the big business case presumably will be a bit wrong.
So we could actually ask that as a question. Will this eventually... I don't need to ask the question, you've just heard it. Councillor Winch.
I was just going to make a few comments on this. I think from the point of view of LGR, this budget is sort of ignoring it. Yeah, and Melissa's saying there will be provision in for the cost of doing it. But I think it's really important for our point of view, there is a vague possibility it doesn't happen. And we don't know what exact form it's going to occur in, and so we can't really put any assumptions in numbers about that. But I think it's really important from a good decision-making point of view that we imagine we were still a separate entity, and therefore we make the decisions so that that separate entity would be in as good state as possible when the things are put together. So I think that's really important that we do that, and if the numbers are changing in some way, that we take action while we are a separate entity to do that. Clearly the numbers in the medium-term plan in the 29-30, they're not going to happen, because we'll probably be part of another entity and the organisation will be different and the cost structure will be different. But so we're just giving you a presentation of what it would look like. Councillor Patchett raised the issue of what about the reserves and the million here and there. So just to be clear, if we use reserves, we use £1 million of reserves, in terms of the revenue budget, his impact is 40k a year, because it's the interest on the using those reserves. And we've currently got reserves of about 50 million. And we're going to, at the end of the medium term, I can't remember, it's about 29 million, something like that. So there's still very significant reserves. If we don't use any of those reserves, which would make the numbers look a bit better, that means we wouldn't have been using all that credit that the residents of Mid-Suffolk had built up for the residents of Mid-Suffolk. So there's a balance. We don't want to go the other extent and sort of blow the whole lot in a frenzy of spending. But if we did none of it, the residents of Mid-Suffolk are going to lose out. So it's trying to get a balance there.
So with that, that's Councillor Rose made quite a good point there with the fact that we're going to go through this process just ignoring unitary, but also at the same time we don't have any information that would put us in exactly one place or the other with unitary. It's a bit like these business rates. As soon as you say, oh, well, we should get some business rates and put a figure in, you've made it up, and the whole accounts are completely useless. But at the same time, before you actually put that information in, anticipating getting it, it means it's completely different. But I wonder if there's a recommendation there from Councillor... Sorry, would you like to come in?
Well, yeah, on what you're saying and Councillor Rowe's point, which I think is prudent, would, at some point in time, we're almost going to have a shadow budget, I think. So I think what we need is a much simpler version of what we've just seen here, that actually you grab figures from the other councils and we see what they look like as a whole. So, so when we look at the deficit, the reserves, I wonder if we could have another column, which is the shadow LGR column, essentially, where you show the collective deficit, the collective reserve, the collective expenditure, the collective income, so that we start painting a picture of where we sort of fit into it, perhaps.
We need to know what it is first, though, don't we? Because we have no idea what it looks like whatsoever. It could be 3, it could be 2, it could be 1 council, it could be anything. It could be, like you say, it could be nothing at all. It might never happen. It's really, I think there will be a point when we've got a bit more information in, but I think things are going to happen quite quickly. As soon as we get to that point, things are going to happen quite quickly, and this is year on year. So,
but much like the way we're currently forecasting now up to 31, and we pretty much know 99% we're not going to be here in 31. So, what is the harm of doing a shadow budget based on one big blob of council and the three that have been proposed as well? So
it could be a recommendation. I'll let Councillor Rowe, considering he brought this in, I'll let him come in and say a bit more.
Yeah, I think my recommendation would be more like, so for last year and this year, we haven't known what structure things will be. I mean, and last year we hadn't even done business case that we sent off to the national government. So it makes sense taking the approach that Councillor Lynch talked about. But next year, I think because the government should have made a decision, we're expecting a decision kind of in the next few months. So then, and kind of we already seeing the effects of the fact that kind of there's going to be less staff costs across kind of the unitary councils, and that will be something linked to delivering the services that we do as a district. The issue of lumping it all in is then there's a mix of what is currently county and what is currently district, so it wouldn't necessarily be what kind of we're spending on. But yeah, so from the next one, I would want to see what the difference in costs there would and income there be from the fact that we would be the bit we're in charge of would be in something where there could potentially be, for example, lower staff costs, rather than having it as a kind of all separate, just running the district as normal bit in the long run.
Yeah, okay, thank you. And I'm sorry about misaddressing you earlier. Have you managed to get a recommendation for that we could maybe have a vote on? Because I think it would be with the information, wouldn't it? The key is that it's funny really, because we've got these papers and we've got waste freighters going through 5 years without being replaced, no expenses paid on them. We all know that we won't be replacing the waste freighters in year 4 or year 5 because it will be so close to LGR. It's but in a normal plan, you'd be looking at some money going towards keeping that fleet running. So it's very difficult you've got to deal with this in two ways all the time. Councillor Baker.
Just trying to think this through. I don't think we're in a position to do that. I don't think these guys are. So Arthur will be getting those instructions in the coming months. All of that work will be coming. And as an overview and scrutiny committee in our current form, I don't believe it would be our role. It would be a shadow potentially group that would start to look at that work. So I don't know really if it is our role, and I'm not sure, so I don't know. But I think that this work will come and it's not ready yet. So I think by us putting a recommendation in, we're potentially putting something in and it's not going to come, or it's not the right time, maybe next time round, maybe in a few months' time. But, I know we want to get on with this and we want it in there, but I don't know if it's the appropriate thing to ask.
I think what I'll do is we'll do other recommendations on a block, and I'll leave that one separate and we'll have a vote by show of hands on it, because that does seem like the controversial recommendation in this. I do kind of agree with you, Councillor Baker, in the fact that we've got to be careful because we're going to be doing too many things at one time, and also there's going to be so little information out there that everything is a speculation all the way through, and obviously a budget can't be that much of a speculation or it's completely pointless. Alicia.
Thank you, Chair. I don't know if I can. So on that recommendation specifically, I haven't got a finalised wording. I would appreciate if I could talk to Melissa and the team maybe about it. for 5 minutes, so we can maybe construct a recommendation that's viable and has our ownership in case it passes, because I do want to echo what Councillor Baker has raised, in that pretty assured that the work with the shadow budgets will obviously be going on, but whether it's our place as a scrutiny committee to take ownership of that is a little bit different. So I'd appreciate some time to tweak out the finer details, so then I can present a recommendation to the committee.
Do we want to have a vote for the principle of putting that in before you do that work? Because I do wonder if it's not going to be carried, then you might be wasting your time trying to get the wording exactly right.
Thank you, Chair. If that's entirely up to you, I'm happy for you to gather a consensus from the committee as to whether you want to go forward with exploring.
I can do that right now, and then we'll. Okay, Councillor Scarf, are you proposing?
What I was going to suggest, Chair, is I think that we give Alicia and the officers the chance to discuss a theoretical motion, because you can't vote for a motion in principle when you don't know what the content of that motion is. So I think Alicia's suggestion is an eminently suitable one. Perhaps it would be time to have a short comfort break now whilst the officers put their heads together and then come back, and then we can decide then.
Okay, and yeah, I'll take that. So we'll, Councillor Rowe.
Just quickly, what I was thinking is not for this budget, but for next budget, where we would have information. So yeah, when you have the discussion, because I appreciate there will be lots of stuff, like there's lots of unknowns and there's too many to add it into this budget.
Yeah,
but it's just.
And
so
I think the recommendation will encompass the fact that it can only be done if there's enough information to do it, and also it's asking them to do it. It's not saying do it. So I think we're quite safe to ask the question of what's possible.
Chair, that was my thinking as well. That it's not for the February budget. This is for this when this committee meets this time next year to discuss this document in 12 months' time. So we should have a much better picture in 12 months' time of what's going on with LGR and shadow budgets and things.
Yeah. Okay. Well, we'll go for a 5 minute, just a 5 minute break. Thank you. So we can get on, and yeah. In the meantime, hopefully that work can be sorted out, and we'll come back to it, recommendations and voting. Thank you. Right, thank you very much. Welcome back. And Alicia, would you like to tell the committee the recommendation?
Would you like me to just do that specific recommendation we were working on?
I think if you do all of them, and then what we'll do is we'll have a separate vote. I think we can do the first three on block.
Okay.
And then a separate one, unless anyone's got a problem with that, and then we can do them all individually, but I think those first three can be on block. So if you do the first three, and then we'll...
Of course, Chair, thank you. So recommendation 1 is as listed in the report, that the committee notes the draft general fund budget proposals for 26-27 and the draft medium-term financial plan. Recommendation 2, that future reports on the draft general fund budget outline further how the Council's different key objectives, as set out in the Mid-Suffolk plan, are being funded and that extra narrative is provided throughout the report. Recommendation 3 is that further training is offered to all members on employee pensions, council investments and Gateway 14 dividends. So those are the first three, Chair.
Okay, so should we just have a hands up, or we might as well do the whole process there, and then we'll... So you can have a proposer for those three, Councillor Piper, and a seconder, Councillor Scarf. Do you want to do that just by hands up, because it's going to be quite complicated, isn't it? So hands up, all for that. That's unanimously carried. So now we'll go to the fourth recommendation, and then we might need a bit of debate on that.
That's fine. So thank you for giving me some time to draft this recommendation with Melissa. So we have it written down that the Cabinet Member for Finance and Resources, in partnership with the Director for Finance and Procurement, will ensure that the impact of local government reform is considered when setting the 27-28 budget.
So, particularly Councillor Rowe, is everyone...
That's better, that's more nebulous. I mean, what we were talking about before was too much right. Yeah, do this, do that, but we should be a closer waste of time. That's better.
Yeah, I think I was going to not vote for it before, but I think that recommendation I can agree to, because I think it would be mad not to be doing that by that point. So I think that's a good recommendation. So are we happy to
Can we just clarify what's meant by impact? So do we mean as in the impact of how much LGR costs us to put through, or do we mean impact as in we're looking at a unitary council budget, how it's going to impact the unitary council? So is it what's as in what's LGR costing us, Mid-Suffolk, while it's still Mid-Suffolk, versus how our budget is impacting the next council? Can we just clarify what impact means?
It'd be quite difficult to do it how it's impacting the next council, because we're not that council. So it's gonna. I think it would have to be from a Mid-Suffolk view. Impact meaning how would that change different things? I think it's quite important for projects and things like that could be cut and things like that to once we know where things are going, to work out if we need to fund things further into the future than we are, to make sure that they survive and things like that. There's ever such a lot of elements to this, but I think it would have to be from a Mid-Suffolk point of view, because we wouldn't be anything else. Councillor Scarf.
I think you're absolutely right, Chair. I get what Councillor Patcher's trying to do, but we can't mandate a future council, whatever that council is, in terms of expenditure. All we can do is leave it the necessary resources and assets in order to be able to run as a council. So it's that delicate balance between spending everything we've got, which was mentioned earlier, which we can't, because we'd be reckless if we did, but trying to set the groundwork, if you like, for what we would like to see. And I think those kind of negotiations happen in the shadow authority role rather than perhaps in our role. So, but I could certainly support the recommendation now.
Yeah, and I think Councillor Winch makes a really good point about Mid-Suffolk money being spent on Mid-Suffolk people, and that would all be able to be addressed in that. So can I have Councillor Rowe?
I'm not sure this is entirely fitting with what I was meaning then, because I'm looking at kind of the medium financial term where it's looking at sustainability, and it's a forecast. It's going to be a forecast of what happens, like providing kind of government says that there's going to be new unitaries, which we will have more certainty of next time. The forecast about what money will be needed to deliver the services that we are currently in charge of, but we won't be in the kind of the 5-year term, the end of the 5-year term. But presumably we can do that when there's a change of administration. So there, and we've done the business case. There's been quite a lot looked into kind of what costs and stuff could be for some stuff. So I get there's a lot of unknowns, but to kind of have a forecast which goes, we don't know anything, doesn't quite marry up with what work we've already done and what's being discussed with the.
So my view on that was our business case is for consideration. There's like different business cases going in. There's definitely a 1 unitary council and a 3 unitary council business case. The government might even do a 2 unitary one. So it's absolutely there's absolutely no favouritism on any of those business cases or anything. It would be it would be an incredibly it would be a real stab in the dark if we started doing that. But when we've got in this next in this budget year the 27-28, we would know those things.
Yeah.
So it kind of can't really be done until we absolutely know what that would look like, because it's just your guess is as good as mine. I wouldn't put money on any particular form of unitary or any business case being taken up on any of them, because it's just absolutely nothing's giving us any idea of what that would look like.
Today, but this time next year, we will have those answers. So that's what this recommendation is about. This is about December 2026, not the next budget. When we're sat here again in a year's time, that's what this recommendation is about.
Councillor Baker.
Sorry. So I think if that's the case, then we need to calendarise that for some months ahead, for us to review it, in next year, if you like. The recommendation you've got there, I think, is very much in line with what Melissa had already got planned in her workload that you mentioned in one of our comments. So so I think that kind of matches what Melissa had planned. If that doesn't meet what the other councillors had wanted to put in here, I'm wondering, do we need a separate line? Do we need to delay that? Do we need to vote on it now? Do you know what I mean? Does that make sense?
I suppose it helped to get some, because we had, I've kind of responded to conversations that are having it. Maybe it'd be useful to have a response from Melissa and Councillor Winch about whether what I was describing would be covered by what Alicia said with what you'd actually do. You see what I mean?
A little bit, because I think I understand what you're struggling with, is that we're portraying a medium-term financial plan for when we're not going to exist. But, as we stand here today, we are a going concern, and part of my job as your Section 151 is to look to the next few years, assuming the status quo at the moment, to know, are we financially sustainable? And as Councillor Winch mentioned, if the situation is as bad as it is, we want to be making plans to make sure that we are financially sustainable. So we would be looking to make savings to, generate income so that we're not in that position that we've modelled at the moment. So for me, we're a going concern as we stand with no decision from government at the moment, so that's what the MTFP is. But I understand why you're struggling with an MTFP that goes beyond what, but it may change. So as we stand here today, we are a going concern and we need to make sure we're financially sustainable, and that's what the MTFP is there to use as a tool to model scenarios to say, okay, this is where we're going to be.
Councillor Winch.
Yeah. So I think if you roll on a year's time, let's assume a decision has been made, then it's a much more valid question to say, why are you stringing out a forecast over the next 4 or 5 years that you 100% now know there's an alternative? And probably what would happen is some kind of cost savings lines in that budget based on some collective discussion. That's probably what you'd end up doing. But that needs, and I think that's a perfectly reasonable recommendation, but that's how it would probably be handled, that the assumption of all the authorities is you could save this amount by consolidation, so you'd start building that into your figures. But an integrated budget couldn't happen next year because we haven't got any authority to be doing that, and no one would play ball. So we are... Councillor Patchett.
Yeah, sorry, just thinking perhaps of another recommendation that might be able to scoop a lot of this up. I mean, I don't know what the committee thinks about it, but I wonder if we could recommend that when the decision is made, whichever way it goes, we call an extraordinary meeting, and there probably will be lots at that point in time, an extraordinary meeting of scrutiny, so that we can discuss what we want to see in the budget going forward. So perhaps we deal with it in an extraordinary meeting and we just debate what we want to see going forward on our documents, and then we could thrash it out in a proper meeting, perhaps that's just dedicated to LGR and budgeting.
So we could actually look at that in the form of when Cabinet... Councillor Wynne.
Sorry, I think what's going to happen is when some decision is made, we're going to be given some kind of framework we have to work within. And I think probably the role of scrutiny is then to discuss that framework and what we're doing within it. But I don't think a decision's going to be made and then it's going to be, and this is the time, this is why you're going to have to go, but it will take time for that timetable to be established. And I think you need something more to scrutinise. Otherwise you're into policy making, not scrutinising.
I think it just goes to show
what you want. I'm just saying it'd be difficult because what are you picking apart?
It goes to show what a problem uncertainty is with everything, because it is a really difficult thing. It's even difficult to get to the bottom of this recommendation because of the uncertainty that we've got about it. I don't know. Would you like to put forward a new recommendation, or should we take a vote on the other one as it is, or would you like to amend it, Councillor Rowe?
Based on what Councillor Wynch said, it would include when decisions have been made and there is a kind of more information, and so it could then start putting into the medium-term financial physics, and whether it ends up being a kind of having a potential, it might be here's a potential forecast, but it sounds like the recommendation as is would cover what I want, given what Councillor Winch said would be in it. And I completely understand why it's not in the current one because of the going concern, and kind of we need to look at sustainability of what is known at the moment. So completely get why it wasn't in this one.
Thank you. So I'm going to take this straight to the vote now. If we can have a proposer and a seconder for this. Councillor Rowe is the proposer. Councillor Baker is the seconder. We'll do a show of hands this time. All those in favour of that recommendation? That's unanimous. So that's carried. Thank you very much. And thank you very much for answering all the questions and being here. We'll go straight into the next item because we've had a break quite recently, which is item 8 MOS 25.8 Housing Revenue Account 2026 to 2027 Draft Budget and 30-year Business Plan. Do we need Deborah's and Councillor Winch is going to handle that, and have we got all the officers present that we need, and any other officers that need to get away, please feel free to leave. Thank you so much. Do you plan to introduce this item, Councillor Winch?
I'll probably just say literally 30 seconds worth. So the HRA budget is forecasting a deficit of 255k for next year. That is against a budget deficit of 2.1 million this year, so it's a substantial improvement. In fact, we're expecting we're going to do a fair bit better than budget this year, so we're expecting a budget deficit of 1.6 million as an actual for this year, but that's still a significant difference. So our income has increased by 1.3 million and our expenditure is reduced by 915k. So where is the income increase coming from? So it's largely down to a 4.8% increase in rent, so that's inflation plus 1%, so that is the 90% of the increase in income. In terms of costs, we've got 915k savings from a range of places, but mainly from savings around repairs and maintenance. And we've got a capital programme of about 17.5 million versus a revised programme of just under 15 this year. This is the first time since I've been a councillor that we've got an HRA business plan that shows that we stay in surplus over the medium term. So this is suggesting that we will have a little bit below, a small deficit for the next couple of years, and then we will be making a surplus. That would be a huge step forward for us, because we were always looking at in 3 or 4 years' time we were going to be in very serious problems. A couple of commentary things that we have agreed will go in the next paper, but all our properties will be EPC 3 by March 2028. That's not in the paper. And something that has been done over the last 18 months is we've now got a much better handle on the state of our council housing. And the unfortunate bit of that is we are now very clear that our non-decent homes percentage is a lot higher than we previously thought. It's about 15%. And the plans that we've currently got, we'll make this more explicit in the commentary, are to get it down to 5% by March 2027 and 1% by March 2028. Yeah. So there's a lot of expenditure around decent homes, but we've contracted the amount of house building or purchase that we're doing to balance that. The only thing that isn't, that is still a worry, and I don't know how this is solvable, is that our loan in the HRA continues to grow. So it's growing from 129 million to 165 million by 2029-30. So that carries on growing. But we have made a major step forward if we can get this account into something that is not going to consume the reserves over the next few years. There is one significant assumption in the numbers, and that is we're assuming a £2 rent convergence, which means that anything below a sort of notional government target rent, you can add £2 to the rent in addition to a percentage increase, which will, generally speaking, our rents are very low in mid-Suffolk. We've got a very high percentage of per week, yeah. But that hasn't been 100% confirmed by the government. So that's in the numbers at the moment. And I've probably given that's probably what I need to say.
Thank you very much. So, yeah, the HRA, obviously, this stands in a completely ring-fenced account away from the general fund. So none of these, the previous figures count towards this. I think we've got to, there's many aspects of this, whether enough money's been spent in this plan on maintenance, whether we're investing enough, and also how it stacks up. So I'll go to questions now, if there's anybody would like to kick that off. Councillor Patchett.
Yeah, thanks, Chair. So I'm just looking on page 74. This was the thing I was going to say on the previous one, which is, so we've got like the savings and the additional income. So we're on that one. I was just trying to sort of ascertain which of those things are income and like which are savings. So like I think even like the electrical testing, is that an income? Do we outsource our electrical testing and we get some money back in, or are we saving 120? Same with the recharges. Also, I thought recharges were a payment that we paid back to the general fund. So are we saving 297? But because I thought recharges are something we paid out. So I need just a little bit more clarity on which of those are incomes and which are savings, really. Thanks.
Sorry. Okay, so mainly the income is the rental income, and then just going through this list, housing rechargeable works is in a sense an income. It's recharges to both the general fund and to capital, but where it's going to capital, it's merely moving the cost from the revenue account to the capital account. And then I think that's it for income. I think everything else is a saving. Apologies, garage is income as well, that's income.
Okay, Councillor Baker.
Thank you. Just a couple of queries. Firstly, I'm really surprised that bad debt provision is 0.52% of rental income. That seems really low. So I would have imagined the bad debt provision required would be a lot higher. Obviously, you've got some stats probably on that. And the other thing is revenue contribution to capital has been removed to offset the increase in cost of service, and the depreciation charge as depreciation be used to fund capital expenditure. Is that normal practice? Yeah, can you just talk me through that, just so, yeah, thank you.
I'm not sorry, I've forgotten what the first question was. Oh yeah, so the bad debt provision, that's what we've used historically, and actually we've never needed all of it. So again, we're forecasting we'll come below that this year. We have a very good income collection team. So I think possibly a lot of that is to do with the fact that a lot of our tenants claim benefits which pay for their rent. So it is just a low rate. With regards to the unique treatment of depreciation, that is common to the HRA. That is the HRA standard practice.
Councillor Patchett.
Yeah, just I guess a general question, really. So our HRA seems, Richard's painting a sort of a brighter picture than last year. So I guess, can we have a bit of a flavour as to why that is? Is it because we've put on rent tolerance, or is it because, you know, CPI +1 has brought that? Is it extra rental income? Is that why we're healthier? I guess, or is it that we've made significant savings? So you just paint me a picture of why it's healthier this year, please.
I'll give a 30-second summary and then you can come in with some sensible facts and figures. I think there's two reasons. We managed to raise our income a little bit we introduced something called rent tolerance last year. So our income has grown a bit. We've looked at all our service charges and what we can do about that. So there's a bit of an increase in income. We've also gone through a reasonably big transformation of the service, contracting out some elements of the service and reorganising it. So there are cost savings coming into the cost base here. Nothing super dramatic on either side, but a couple of % here and there makes quite a significant difference. So that's what's been happening.
I'd just add further to that is that we have really looked at what the repairs and maintenance programme and trying to capitalise, planning for the future and making it actually plan maintenance which we can capitalise rather than doing those last minute repairs.
Any further questions? Shall we go through to Councillor Baker?
Thank you. So I can't find the area on the paper. It's something that Councillor Patchett mentioned yesterday about a percentage of residents, tenants that were either unsatisfied with the service or that some of our homes are not meeting standards. I don't know if you recall what you said, something about that. And it was read in the paper here. So I'm just a tad concerned that obviously if we're making savings, if we're getting out of the debt position and things are improving, if we've got kind of not a prosperous kind of baseline for our state of our properties and things like that. I can't find it in here, but I just recall.
Oh, I think you're on about decent standard. Our percentage sort of leapt up. I think was that.
I can't remember what you said, so I just want to double check that.
Yeah, the percentage didn't leap up. It was always there. We were just unaware of it. So it's only what's happened is we've now, I think it's a bit over 80% of the properties, we've now done a stock condition survey, so we actually know the real status, which is worse than we thought. So that has implications in terms of capital spend. So I think the result of that will be much better for residents because we're going to sort that problem out. And as I gave the dates of when we're planning to sort that out, and that's what the investment over the next 3 years will do.
Lovely, thank you.
And a lot of this is grant funding and parts coming in, and it's quite, and it does rely. Is there the same uncertainty with that? I know we're going to go into the unitary council argument again, and what does it look like? We don't know. But are we absolutely sure of the funding that we need for? There's a few. There's building safety, energy efficiency, and.
Well, we're all shaking our heads on that. There isn't really any grant funding here.
There isn't.
No, this is the council house rents and a little bit of service charges pay for everything, including the new build of all council houses. This is the system that we've got in this country. It's how it is, and so we're constrained. We could go off on a tangent here, but in terms of this budget, that's what you work in. So you've got your council house rents and a bit of service charges, and then you have to make everything come within that constraint.
Yeah.
Now there are some grants. We've got a grant for social housing, decarbonisation of housing stock for the capital programme, and there's a few other things, but there's not like we're waiting for this big revenue grant or not.
Mm. And there's a retrofit grant? Yeah. That's the decarbonisation part of that same fund. Okay, so we maybe have a little bit more certainty.
That works a bit differently, that you bid for it, so there'll be a new wave and you bid for it and you have to put a credible bid together, and then you know whether you've got the funding or not. Then you go out and launch a programme against that funding.
So we don't have, we can just do a programme with as soon as we get the funding, so it's definitely not something that we can just, we can rely on. Okay, thank you. I don't know if there's, Councillor Scarf, I'll let you come in with a question. I was about to go into debate, but...
well, it's just, have you got any clarity regarding the rent convergence details coming out from central government? Because obviously they were delayed in the autumn statement. They're now expected in January. Will it be that we will be able to know the answer, do you think, before council actually approves the housing revenue 30-year plan, or how long's a piece of string, basically?
Apparently we don't know. As what I would like us to see is I would like us to have some numbers that makes it clear what the impact might be if we didn't get that, so that councils are able to say, oh, well, I can see why you've gone for that, but if that doesn't happen, this would be the impact.
Yeah. Thank you. I think that's very helpful, because we are forecasting rent convergence of £2, so we are we're optimistic on that one, whereas we were pessimistic on the other, general fund, to a degree. So there is.
I think that's going to come about as well.
Yeah, there is a presumption there. Yeah. Okay.
Councillor Patchett.
Thank you, Chair. I think I've got an idea what you were kind of alluding to with your kind of EPC question. I guess, and again, this is LGR related as well. So we're striving to get our houses into a certain EPC state. But if the rest of Suffolk isn't doing that, are we going to have this little island of really good? We're striving for this target that we're pushing for. If the rest of the county isn't doing it, we have got this little island of really good EPC houses, but the rest of them hasn't. So is there going to be a point in time, I guess, where we converge our standards with their standards, so we align it, so we're not overspending needlessly, essentially?
My answer to that would be we're investing in the properties that are in mid-Suffolk. So even if the HRA, which will probably become, it will become a bigger entity, probably they'll be merged or split or however we end up doing it, those properties will still benefit from this, and the people, the residents of mid-Suffolk will still benefit. So I think this is money that's being ploughed back into our current tenants, who will always benefit from it with lower bills from heating by us doing this. So I think this is a bit of a no-brainer. It's just the constraint on how quickly we can do it, because we haven't got enough money to do it as quickly as we might want to.
Sorry, something I've just seen on the business plan on page 90. You may have covered this already. So on the 26 to 30 year summary, can I just get this in my head? Where it's got loan drawdowns and loan repayments, there's a contra, on most, until you get to 47, 48 and beyond. Why is that?
Sorry, in those years it assumes we can repay because we should have enough within our reserves at that point. Whereas, and also there's smaller loans which are easier to repay rather than those large ones.
Yet the balance continues to rise.
The balance slightly declines.
I was just looking at that line and trying to read the thing. Row 23, so if there is a repayment of 3,500...
You've got revolver borrowing in there.
Revolver, okay.
So you've got 6 million drawn down from the revolver borrowing that year.
Yeah. Do we have a plan for that? Or not really? The fact that the closing loan balance is continuing to...
If we reach 2048 and the HRA has done... We'd be paying half of all rents in interest payments. It would be... Somebody's got to sort the problem out by then. Somebody being us collectively, government-wise.
Any further questions before we go into debate? No. We'll go into debate then. It's a really tough one, this HRA. It does seem better than it's seemed in the past, but one of the things you look at is the borrowing sustainable, and you do worry that it's not sustainable, but there's very little that can be done about that. We're sort of stuck with this operating in the way it is. We've got quite reliable rates of interest and predictions going in, and we do see we almost are in interest meltdown with it, and there's nothing we can do about it. And I think the only thing that solves the HRA account long term is to have the debts cleared by another government or something like that, which I think unitary or local government reform will have to address this in some way. I think for me one of the biggest questions is are we maintaining the standards in the of what we need to with this housing? And I think we are. We're kind of ignoring what the borrowing's doing to keep those standards where they need to be. And it's you'd either massively cut standards and address the debt, or you keep standards there, keep the quality of housing up, say, you know, increase the rent, and just try and almost hope for the best in the long term. So it's a difficult one. I think this is the right way of addressing this. I wouldn't ever like to see a council say we're going to make this work and cut it, because there's too much at stake. But you know, I'll go to the floor really. This is yeah, it's quite difficult. It just doesn't, the account just doesn't work. It doesn't add up on. It works a little bit more in these accounts than it has in previous years, but it's still just a very difficult thing to get right. Would anyone else like to comment? Councillor Scarf.
I think, Chair, I'd like to say I welcome that the housing revenue account is in a much better position now than it was a few years ago. However, it's still very precarious, as are all housing revenue accounts for local authorities. The thing I would love to see really is less government interference in the rate setting for rents, because we have suffered tremendously from the -1% for 4 years, and the effect that has on the 30-year business plan is enormous. And we have to balance that against the fact that the government, through the housing regulator, quite rightly is expecting councils to up their game. We've got very good, we've had the Tenants Board in here to Scrutiny Committee recently on regular occasions. Their expectations are high, our tenants are high. We're trying to do the best for our tenants, we're trying to improve EPC ratings. After all, if we were in the private sector, we would have to have everything at a certain level and then be aspiring to EPC B within a very short time period, actually within the time period of probably the medium-term financial plan. So to expect us to do anything different would be rather perverse, because we don't expect things to be better in the private sector than they are in the council housing sector. In fact, we probably expect them to be better in the council housing sector than in the private sector. So I think what we're doing is trying to balance an ever-changing expectation from both the tenant regulator and our tenants, and we want people to live in decent homes. It's kind of an impossibility actually making the whole thing work, but we are in a better position than we were, and I think that is a fact. So I welcome it. I think there are some serious risks if the £2 a week doesn't come out. I can't see how the government wouldn't actually allow that, because I expect most of the consultation responses from local authorities went for the £2 a week, please, because that will help the situation. But we're sort of trying to move forward whilst we've got two hands tied behind our back all the time because of central government interference. And I think what we need is some more flexibility from central government actually in terms of what we could do with the rents. So it's CPI plus a higher percentage than 1%, so we can gradually rebuild that money so that we can actually invest in decent homes. If they want decent homes, they've got to allow the council to actually, you know, budget for it. And it seems to me they're always not doing that.
Thank you very much, Councillor Scuff. Councillor Patchett.
No, thank you, Chair. There's not really much we can say about the HRA, is there, other than thank you for doing what you are doing. You've identified savings, which is brilliant. You've increased income, which is brilliant. So thank you to the housing team and the cabinet member for housing for getting us in a more favourable position. That's essentially, it's all we can ask. We all know why we're in this position, and Councillor Scarf alluded to it, and I think we can't have a debate about HRA without sort of mentioning why we're in this position, and we know why we're in this position. You know, the early 80s, Thatcher, right to buy, selling 2 million social houses worth 453 billion for 56 billion with a huge discount. We're also in this position because of the 2012 self-funding model. We're in this position because of the 2016 and in the 4 subsequent years of the -1 rent. We're in this position because of the CPI cap of 7%. That is why we're here. How the councils borrowed just over 29 billion to buy their houses in 2012. They still owe 29 billion today. Some have paid it off, some have taken more debt. Islington is 1.2 billion in debt in their housing revenue account at the moment. probably only bolstered by the fact that their houses are probably worth so much because they're in Islington. So we are where we are. As the chair has already said, there's nothing we can do other than hope and pray that someone just writes off that debt or a portion of that debt. So I will finish with, again, thank you to the officers for getting us the extra savings and the extra income. You know, you're doing a good job, and that's all we can ask. So thank you very much for the report.
Thank you very much. Councillor Rowe.
Yeah, I was going to echo as well. You can see the amount of work that has gone into it to make anything vaguely looking, well, still not looking good, but the fact that it's looking better and the amount of work that we'll have done given all the nonsensical restraints, but that kind of us having, like, completely rightly being responsible landlords while all the financial constraints which just don't implies on our funding for it basically relies on parts of the community which have least money and are reliant on social housing, which just seems like there would be a much better way to do it. But yeah, it's good to see the amount of work that has gone into this report.
Thank you, Councillor Rowe. Councillor Baker?
Just reiterate what everybody said. Thank you. It's really helpful to see all of that information, and yeah, it takes hours to look at it and understand it, but training is always welcome on the HRA. You know, we do get taught bits and pieces, but a reminder is always welcomed. If that's possible.
Okay, are there any recommendations that anybody feels they want to put in at this point? We can read through the recommendations. We already have a recommendation, don't we?
Thank you, Chair. Yeah, there is a recommendation as noted in the report, which is just that the committee notes the draft housing revenue account budget proposals for 26-27 and the draft 30-year business plan.
Right, is everyone happy with that being the recommendation that comes out of this item? Do you want to do that electronically or show of hands?
We can do show of hands.
Yeah, we've been doing that, so yeah. So could I have a proposer for the recommendation, please? Councillor Scarf and seconded Councillor Rowe. And all those in favour? Unanimously carried. Thank you. Right, and thank you very much for sticking with it. Feel free to leave now. We've got a few more items just to go through, but we're quite happy for you to leave. And yeah, thank you for what you've done today. So I'll go on to. Are we on item 9? Yeah. Item 9, forthcoming decision list. Are there any comments on the forthcoming decision list? Everyone had a chance to look at it.
So are we not doing any scrutiny between now and May?
The work plan has items populated on it for February and April on page 99. No worries.
Yeah. Yeah, no. Any other comments? Because that's for noting that item. Councillor Piper? No? No? Okay. So, noted. So, item 10, Mid-Suffolk Overview and Scrutiny Work Plan. Councillor Scarf.
Not being one to have meetings for meetings' sake, but we've got nothing against March, and we've got nothing actually in the suggestions from members that we could actually prioritise for March. and time will be running out because obviously we would need reports from officers on that subject. So maybe we need to think about what will we do in March, and would that be an opportunity for training on something or that kind of thing, or would it be an opportunity for us to visit another authority and see how they carry out scrutiny? I know that's been discussed in the past, but it might be an opportune time.
Yeah, I'd be quite happy to do that.
Yeah, thank you, Councillor Scarf. Lots of fab ideas. So if members had any items that they wanted to come to the March Scrutiny Committee, I would urge members to start thinking of that now, so we have from January onwards to start scoping that with officers and cabinet members and getting a thorough item into the March committee. I had Babergh overviewing Scrutiny Committee this morning, had a sort of similar suggestion. They are quite keen on having an informal session in January, as it's now too late to really prep an item to come to January's committee unless there was a cabinet call in, say. So I am maybe potentially looking at doing a January informal meeting, and if Mid-Suffolk members were keen on that, then obviously very open to making that a joint meeting. But yeah, if we don't have any items forthcoming for March, then we can make some plans as to how we maybe best use that time. Thank you, Chair.
Okay. Okay, so that's for noting as well. And Councillor Patchett.
Do we ever scrutinise the risk register, significant risk register and other risk registers?
Thank you, Councillor Patchett. We haven't scrutinised it in my time, as far as my knowledge goes back to. I know there are conversations happening about a risk register outside of a meeting, which I wouldn't necessarily want to commit to in this committee meeting. So if it was something that the committee were keen on maybe having an involvement in, we can have a discussion as to how potentially scrutiny might be best fit. Obviously, you have the Audit and Standards Committee as well, and there is a bit of overlap on risk, since risk more formally sits under the Audit Committee. But there's conversations to have outside of the meeting, I think, with officers.
Yeah, we did have a previous meeting at this stage where we said that we would like to, councillors would like to look into that. I have been speaking to Councillor Matheson, and I think it's really important to scrutinise the risk register. But I understand how we do that still being looked at and maybe fought for.
Well, look, so risk.
Alicia, just let Alicia come in.
Sorry, just a bonus point. The benefit of having colleagues in the room. My colleague Beth, who does the Audit and Standards Committee, has just advised that on the agenda for next Monday's Audit and Standards meeting is an item on risk management, which might cover some of the topics that members are keen on. If not, we can have a further conversation from that point on as to what specifics maybe scrutiny wants to be involved in. As I say, after conversations about where scrutiny best fits with the process.
Because the biggest problem is we've got that risk register, and risks are registered but not necessarily looked at, and we do, as a council, as a scrutiny and audit, we do need to actually look at those risks, not just write them down somewhere and say, yeah, we understand that risk. Councillor Patchett.
So the thing is with risk is, and it being done by audit, scrutiny looks forward and an audit looks backwards. You can't look backwards at a risk because you're actually looking at an incident. If you're looking backwards at a risk, something's happened. So risk is things that haven't happened and could happen in the future, which I would argue is looking forward. The reason I say this is because on the last council meeting, I looked at the risk register and found 3 anomalies in it, which some of them have been addressed since, but I found 3 anomalies in the risk register. In fact, one of them hasn't been addressed yet. So, and that's just me scrutinising it myself. It would be much better done as a collective with a debate, because otherwise I'm having too much influence on that, and it should actually be a committee.
Yeah, totally agree. And I think it will be, if that's on the agenda for audit, and I should think that will be to discuss a request for scrutiny to look at that in a way that they deal with that risk register, so I think they'll have quite a good idea of what they'd like us to do, and obviously they've got to get that through their committee to make sure it's a good idea or not. So
I'll also have conversations with the head of strategic policy and our risk management lead outside of this meeting as to how best we can maybe make that fit for scrutiny's purpose, and I'll feed that back. Thank you, Chair.
Yeah. Councillor Baker.
Management in alignment with external recommendations and the Orange Book, so they're looking at that in a lot of detail. So I think it may have come forward, risk appetite levels, all of that sort of stuff they're looking at.
Yeah, Councillor Matheson's sort of been talking about this for quite a while now, and trying to work out a way that we can do it. So I think that is the item that will bring it out. So yeah, no, that's good. Any further comments?
Just with the HRA, I mean, we know that system is so fundamentally flawed. I don't know what we can actually do to make any recommendations when we see it. What can we actually do? Yeah. I mean, what can we say?
I think maybe that's something for after the meeting that we can talk about. But I do want to get through this agenda, because obviously we're gonna get quite late. But I do feel your pain with that. It's something that's been around for a long time. It's very difficult. So we have the overview and scrutiny action tracker. One thing that I noticed about that is we've still got the recommendation about almshouses in there that hasn't been looked at all, and I think maybe we need to say. I think they're are they not for military? Was it? It was such a long time ago, I can't remember. I think this was brought up by Councillor McLaren.
It was to help fund the ones that were in a state of disrepair, wasn't it? There were a bunch of
And I think it was to do with the ones in Holbrook around the Royal Hospital School. I remember it was asked for. But I think with that, we need to either say no, well, you're not going to do it, or we need to get it off. And also the West Suffolk Safety Partnership. I don't expect any of those to go green anytime soon. But I think that particular one for the joint homes and housing strategy, that's that's over a year. That's like a year and 2 months old now, and I think they should, even if they just send us a thing saying no, we're not prepared to do anything about this, or even ask the question, we can write that off then.
Yeah, absolutely. So just for some assurance, there are quite a number of recommendations on there at the moment that are not started, and I am very much aware of that, and I'm doing my best to chase them wherever possible. I sent emails to cabinet members as late as last week urging for a response. I had a conversation with the head of tenant services, David White, about the recommendations, and he is in conversation with both of the housing cabinet members, so Mid Suffolk's cabinet member and Babergh's cabinet member, about getting those recommendations resolved now, because there is quite an outstanding list for housing in particular. Obviously there's other areas as well, but that is the main problem, so to speak.
Okay, Councillor Baker.
The other one that just keeps coming back and is quite relevant to me and my ward is on page 106. It was first raised 14th of November, probably in 2024, probably raised prior to that, which is that Cabinet reviews the carbon efficiency of the district's leisure centres and conducts a cost-benefit analysis of the financial social value. Well, that came up again recently. We were expecting sort of reports, and I've recently had some more complaints from residents at that leisure centre, and there's contracts and all sorts of things. So really, I feel that that's just bubbling along and not really being addressed. I know it's a really hard one, but I really want to kind of pin that down if we can.
Absolutely, thank you, Councillor Baker. I think it's a hard recommendation to pin down. In retrospect, maybe we shouldn't have put so many different things in a single recommendation, especially in terms of the end-of-life dates, because I appreciate how hard that is to settle with the information that we currently have. But yeah, same for all the recommendations. I will put a little bit of pressure on to get that moving as fast as possible and get those considerations reported back to the committee.
And also with scrutiny, we can't make them do anything. So as long as we get some form of reply, even if the reply is we're not going to do anything, the scrutiny committees pointed out the fact that that needs addressing, and then that's the responsibilities on them to, if they don't think it's something they want to do or they don't see the value in it, they can have that responsibility for saying that. But just having ongoing and never getting anywhere is no good to anyone, really. It leaves the responsibility on us to chase it up, to do it, and that's obviously exactly what we're going to do. But I'd like to note that action tracker and conclude the meeting. It is 20 minutes past 5, and hope to see you all again at the next scrutiny meeting. Happy Christmas, and see you in the new year. Thank you very much.